So very often people tell me, Kai, I love the topic of investing and I want to start really investing and build up a portfolio, but I just don't have time. I have a full-time job, I'm studying, I have kids, what have you, right? And life happens. We all have very limited time. So the question is, how much time does it actually take to get started investing or to really start leveling up your investments? And in this video, I want to run you through this and actually show you a way how you can automate and put your investments onto autopilot, so to say, where you literally don't have to spend a single minute of your time in a month. Once you set it up, it's a set it and forget it system that once it's there, it's in place, it's going to start growing your money over time and you have to do absolutely nothing. Just make sure you have the money and then the rest will be taken care of fully automatically. And historically, that has returned anywhere from 9 to 10%. But before we get to this, I want to give you a quick rundown on the different investment styles, because some of the investment styles are very much hands-on, very active, and take a lot of the time of people. Now, on the other extreme is the autopilot investor, sort of, that basically does not do anything and just has a set it and forget it solution, which probably appeals to a lot of you who have busy lives, right? But I do think it's important to understand the different styles. And don't worry, if you want to skip to the autopilot part right away, you can. I put a chapters in the bottom below, so you can go there straight away or keep watching if you like. It's up to you. Right, so when we look at the different investment styles, I listed them from the most active to the least active. So this way you can get an idea how different styles require more or less of your time. Now the first one is pretty self-explanatory. These are high frequency traders. I mean, these guys are absolutely onto it. It's their full-time profession. They're using algorithms. They're even spending millions to upgrade their internet connectivity because every millisecond counts because of the little price swings. They capitalize on that. They buy and sell many times, even within an hour. And over time, those little amounts, they do add up into huge profits. So obviously, that's not something most investors like you and I will ever get into. And honestly, we wouldn't really stand a chance. And obviously, that's 24/7 trading. I mean, these guys never sleep. They're always on. They're always checking what's happening. I mean, obviously, most of the markets, they trade Monday to Friday. But still, there's after hours. There's on weekend trading, extended hours. So these guys trade everything. And obviously, you could trade crypto, which never sleeps, right? Crypto markets are always open. So yeah, that's just something to keep in mind. Again, not really applicable to most of us. Next up, we have day traders. Now, these people can also be retail investors like you and I, who basically sit at home and either do it full-time or part-time. You know, when they work from home, for example, I know a lot of people, they work from home. Well, they kind of work, but on the other monitor, they always have the latest stock charts open and they kind of try to time the market, right? You want to buy the stock when you think it's a little bit lower and you think it's going to go up and sell it at the end of the day at a profit. Or if you short the market, you could make money when the stock goes down. So different ways of trading, but basically the idea is that you would never hold a position for longer than a day. You would always buy and sell in the same day. That's kind of the idea behind it. So that's really daily trading activity. And as it says, it's a trader. So you have to really make trades, right? You buy, sell, high activity, can be multiple times a day as well. And obviously that is very active. You have to really dedicate yourself. As I said, some people do it part-time, but most people really do it full-time. They do it Monday to Friday when the stocks are open. And it takes a lot of mental capacity and brain power to follow the market, see the news, what's happening. So yeah, this is something retail investors can do, because here we're not talking about trading within seconds, right? Or milliseconds even, as we had the high frequency traders. But here's, you would hold it for a couple of minutes or a couple of hours in a day and then sell a position towards the end of the day and hopefully make a profit. Now, one thing to keep in mind, you see a lot of the courses on YouTube and Instagram, all these guys driving fancy Ferraris and what have you. And sadly, I think it's these guys that give investing a bad rap, because honestly, it's just not feasible, right? Some of them, they promise you, if you join the mastermind or the membership, I will promise you 2% daily profits, right? And when you think about 2%, doesn't sound that much, but when you calculate it, 2% every single day, that will be over 1,300% return. I mean, it's just unbelievable. I think some of the smartest investors in the world, they have an annual return, annualized average of maximum 20 to maybe 25%. I mean, that's already really exceptional. When the market, the S&P returns anywhere from 9 to 10%, over 20%, that's already outstanding. Over 1,300% for the whole year, continuous years in a row, is just not feasible, right? I think they make more money on selling you the memberships and the courses than they actually do trading. It might work for a couple of days, it might work for a month, even maybe for a year. But when you look at it long-term time record, it just eventually falls short and they start losing money. So this is something I really urge you, please stay away from it, because we're not insiders, right? We don't know the companies inside. So you're always late to the game. You're always relying on news that are coming out. Otherwise, it's considered insider trading, which is illegal. I always recommend staying away from day trading. Next up, we have swing traders. Now, swing traders usually hold their positions for a couple of days or a couple of weeks. So here you would take a big position in, for example, Apple or Microsoft, some of the established companies, and obviously want to have a gain, and then you sell it once you made, I don't know, 5 or 6%, because obviously every stock fluctuates on a daily basis, right? And there could be a good streak where a couple of days in a row, the stock climbs up, then it comes down a bit, but it reaches your point that you set to yourself. And at that point, you actually sell it. You don't want to hold it for many years because you don't believe in it for so long. Nobody knows the future. So a lot of the people, they do swing trading to keep it for a couple of days and then sell it, make the profit, and then reinvest the profit into new positions. So that strategy obviously is very active. You have to be really understanding the markets, be involved with it and follow it. Maybe not every single minute and every single second, but obviously on a daily basis, you do want to read what's happening, how's the day been performing for your stock. It's definitely very much active. If you have the time and the interest, I think it can definitely be a great strategy. Myself, I know quite a few people who do this full time and they're doing quite well actually. Definitely something more sustainable, I believe, long term than being a day trader. But at the same time, it still takes a lot of your time that you need to dedicate to follow the markets and so on. So for me, building my own business, having the YouTube channel, my other social media content, etc., I just don't have the time and interest to follow every day all my different holdings. So if it works for you, great. But for most people, again, it probably is a bit too time consuming. Then we move on to what I call the regular investors. And here we talk about investors. You see, we moved from traders to investors. It always shows you the frequency is less. So obviously here, those people buy a certain share or stock or an ETF and hold it for long term, right? Not forever. It's not a buy and hold, but you hold it for, I don't know, a couple of months, even maybe 1, 2, 3 years, right? And that way, obviously, it is definitely less involved with your time. You might check from time to time on a weekly or monthly basis on your app, on your phone, on your web, what have you, to see how the stocks are doing and how they're developing. And if you're happy with the profits, you might take the profit, sell your position and cash in, obviously. But this is definitely much more manageable compared to some of the swing traders or day traders in terms of a time commitment. But of course, it is definitely still more active because you do want to follow what's happening, right? It's not a set it and forget it. You do plan to sell your stock at some stage. So you still want to follow the markets, but overall, definitely less time intensive than some of the other previous investment styles we've seen. With this, we move to the last category where I fall in myself actually, which I would call the long-term investor category. And here you really kind of plan to buy and hold almost forever your shares. Doesn't always have to be forever, but definitely for many, many years to definitely start benefiting from the appreciation of the stock. Plus, of course, if it has a dividend component, to get the dividend snowball rolling over time as well. That's a category that I fall in myself because, you know, I don't want to be too bothered of having to check what's happening in the market every single day, buying and selling and trading. Again, it can make money, but for me, this is kind of a set it and forget it solution. And then I see over time my dividends growing and I know my money is safe, it's protected, it grows over time as well. So I sleep peacefully at night and ultimately it has to work for you, right? Now, of course, you still can take an active approach or a passive approach. I'm myself taking more of an active approach where I basically buy every single week more stocks that I plan to hold forever in a way, maybe not forever, but for many, many years, obviously, and build my dividend component. In order to do so, I do research the stocks every week, what's happening, the ones I own already, if I want to add some more. It is a bit more active, but at the same time, it's just actively buying, not actively selling. That's already a big differentiation. I just have to look what I want to buy and then add it to my portfolio. Now, on the passive side, that's very easy as well. And that's obviously what I want to focus on in this video is when you buy an ETF, exchange traded fund that consists of a number of companies. An example of the S&P 500, you basically own the 500 biggest companies in America by market capitalization. So even if one of the companies in there, for example, many years, Apple was the most valuable company in the world and therefore it had a higher weighting. So basically not all of the companies are weighted equally. If you're a more valuable company, you do have a higher weighting in the portfolio, right? But now in recent times, Microsoft took over Apple and now Microsoft has a higher weighting. Now, if you would have invested into the S&P 500, automatically it would have been done for you. You don't have to buy or sell because one company is now more valuable than the other. It's all done for you basically. And you can lean back, set it and forget it and just buy the ETF. So that's very much a hands-off approach, which really appeals and is suitable for many people, I believe. And that brings me to the part where you can really automate your investments and put them onto autopilot, basically, where everything is done for you once you set it up. Now, in this channel, I never give stock recommendations, what to buy or not, but what I do myself and recommended my wife as well to do is invest into S&P 500, which are the 500 biggest companies in America, which by default are also global companies, right? Apple, Microsoft, they're all operating globally, not just in America. So you are diversified by nature. You invest into probably one of the strongest currencies in the world right now. As I said, historically, for the last 30, 40 years, it returned anywhere from 8 to 10%, depending on the period you look at. So that's really not too shabby. And that's probably one of the easiest ways for you to get invested. And the cool thing is, if you use some of the apps that I'm recommending and using myself, you can fully automate the buying process. And let me show you how easy it is done. And for that, we're going to be using one of my favorite stockbrokers, which is called Lightyear. So you can just download it, register it, and if you haven't signed up to it yet, use my link in the description below and you get $10 worth of free stock to get your investing journey started. So then once you download it and signed up, all you have to do is open it over here, and then you want to look for the respective ETF. Now, if you live in the US, you can easily buy, for example, the VOO, the Vanguard S&P 500, but in Europe, UK, and other parts, we have to buy the UCITS ETF. It's basically a fancy term that describes it's an equivalent, a European equivalent of the American ETF. So basically the one I'm buying is called the VUSA, VUSA, and it's arguably one of the most popular and most traded in Europe right now. It's from Vanguard, one of the most trusted and biggest money managers in the world. You can see here Vanguard S&P 500. It's distributing. They also have an accumulating. Basically, you get a small dividend that is paid to you, and you can either choose to receive it in cash. It's paid to you every 3 months, or you have it accumulating where it's automatically reinvested for you. It's up to you. In my case, I buy the VUSA, but you can choose another one. The total returns basically are pretty much the same. So let's go ahead and click that. And obviously you can see over here how it's composed of, all the metrics that you want to see, the top holdings, what it is, etc. And then all you have to do is click on buy. Right now, obviously, I'm recording this on the weekend, so the stocks are closed, but just to give you an idea of how it would work. And then from here, instead of just buying a number of shares, you want to click at the top right over here, market order, and you will change the buy type from market order to a repeat order. You click that, and then it's very simple. So basically you have to select the number of shares you want to buy. You can see how much is one share. For example, now it's 88 euros. So if you want to buy one share a week, you could do that. If you want to buy, for example, 5 shares a month, you would select 5 over here. And then instead of weekly, you can select 2 monthly, if you can do that as well. And then you say from when you want to buy, let's say from the 1st of March. So every 1st of the new month, you will buy it, click done. And you can see approximately you'll be spending 443 euros every month buying the S&P 500. You click on preview order just to get a summary over here. The good thing is, of course, there's no execution fee, which is great. How many shares you buy, what amount, and boom. Once you're happy with this, you click confirm, and then every single month, in this case, or if you would have changed it to every single week, it really is up to you what you prefer. I prefer buying weekly, so you could set it up to weekly to benefit maybe from little fluctuations in the market, but once a month is also totally fine. And then it would just go ahead and buy every single month S&P 500 for you. So basically, that's all you have to do. Of course, one thing I would recommend you, in order for the app to buy your stocks, you obviously need money in there. So what you want to do on your local bank or banking app of choice, I use Revolut, you can set up an automated transfer every single month. With Revolut, it's very simple. Every single month, you would basically, at the last day of the month, in this case, just to have it ready to invest, you would make a transfer of a certain amount, ideally the amount that you want to invest, let's say 500 euros, 400 euros, whatever it is, send it every month at the last day of the month into your Lightyear account. The money is there, and then Lightyear automatically on your behalf will invest it for you. It will literally not take you more than 15-20 minutes to set it up once, and once that's in place, that's it. You can lean back, set it and forget it. You don't even have to open the app and track your investments. You know the best way for it is to start compounding over time to see great results. And that's probably the best way for most people to get invested. There are many other apps that allow you to do the same. For example, with Trade Republic, you can do the same. Normally, Trade Republic charges you €1 per order, but if you have a recurring order every single week or month, then they will waive the order fee and you can buy it free of charge without any commission as well. Sadly, the stocks are closed right now, so they don't allow me to trade, but basically you would just click on trade and set up recurring buy, and then the principle is the same. You select the frequency, daily, weekly, monthly, and then it will just keep on buying the selected stock. Of course, instead of S&P 500, you could also just buy Apple shares or different shares. You know, you could buy Apple, Microsoft, and other shares individually if you wanted to do this. So it's really simple, but once again, probably S&P 500, you can't go wrong, because if, for example, Apple drops out, right, it only turns out to be the 600th most valuable company in a couple of years from now. Well, guess what? You will have another one that is the most valuable company. So it's automatically done for you. So that's why you don't have to worry to log in, follow the news. It's basically done for you without any commission, any payment. So it really doesn't get much better than that. And of course, on Trading 212, another one of my favorite brokers, you could do the same. Here it's just called Pi. So you would go over here on Pi, create a Pi. So it's basically you create your own ETF in a way. So you could either follow other people's pies or build your own custom pie. In this case, you want to add the instrument. So if you want to, for example, buy some ETF, but also want to buy some individual shares, you could easily do that as well. But in this case, let's say if I wanted to buy the VUSA, I will just add to this, add to pie, and then boom, I will click over here. Select, 100%. In this case, I can add some more instruments, but in this case, 100%. I can see the average annual return is a little bit inflated. Maybe the time period is not so long. And yeah, basically I click next over here. And then I'm going to select auto invest. Yes. And they make it graphically really nice. So you can see here, if I invest for the next 40 years, I invest in my health. So I want to stay healthy for many years so I can benefit from the returns over time. How much you want to invest every month. Let's say every week, I want to invest, let's say 200 euros. Initial deposit is 200 euros. And then I can see if I did this over time, I would have 5.8 million. All right, that's pretty promising. Now, of course, having said that, right now it took an average return of 14.6%. Now, that's obviously a little bit higher than what I said before. Probably the time period here. Yeah, if I click on this, it took the last 5 years returns of the S&P 500. So they might look a little bit better. Keep in mind, the average over the last 30 years was between 8 to 10%. So it would calm down a little bit, but still, it will probably be, I don't know, 2-3 million over that period if I continue to do this. So you can see how small things over time, it's set it, forget it, and that would definitely start taking care of some of your expenses once you're old. And the last thing I just wanted to touch on, because recently also somebody wrote me on Instagram about this question, it's a very good point. Even if you wanted to take a more active approach for yourself with your own money, that's totally fine, as I do myself. But I really recommend one thing. For example, if you get your first kid or your second kid, what have you, as soon as they're born, set up a dedicated account for them and then just do the same principle that I just showed you with the S&P 500. So that's basically their college fund if you wanted to. So every month, put 100 euros into that account, into the S&P 500. And you see here, with zero investment, $100 every single month, monthly for 18 years, until they're 18, obviously, with the expected return of 8%. So I really want to be conservative in this example. And the compounding frequency is annually. In this case, if you automated the process over that period and added $100 every single month, or euros in this case, doesn't matter. You know, the number is the same. If it was euros, it would be 46,500 euros. So I mean, that's a nice starting balance if you can give it for your kid or just use that money for the college fund, whatever you want to do. But otherwise, to save up for this by yourself and randomly, whenever you feel, you put some money aside or you don't do it. And when they're 18, you have to start thinking how you pay for the college. But I think that's really one of the best way how you can passively grow your kids' fund or starting capital, so to say, over time without much difficulty. And I think that's a brilliant way. I really recommend all future parents to really consider that. So there you have it. Next time somebody tells you investing is really time intensive and complicated and you have to be really actively involved, just show them that video. Honestly, it couldn't be further from the truth. It can be as complicated and time consuming as you want it to be, or as simple and on autopilot if you set it up once smartly. I hope you found the video useful. If you still have any questions, pop them in the comments down below. I get back to every single one of you. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao.